The two crucial votes in the UK Parliament do not clear up the Brexit scenario, so the US dollar perked up amid the Brexit uncertainty. Besides, investors expressed bullish expectations on the Canadian dollar. The euro and the sterling have exhausted their rally. Both currencies look vulnerable in the short term that encouraged a correctional climb of the US dollar. Investors are losing confidence around global financial markets. Risk aversion sentiment comes from the failure of the British lawmakers to nail down Boris Johnson's deal and the Brexit timetable. Another factor is downbeat reports on corporate earnings from some US companies. The US dollar index, which tracks the greenback's dynamic against six major rivals, rebounded after a four-day decline. In the New York session, it is trading higher at near 97.55. Meanwhile, the correctional climb is unfolding quietly without sharp swings. However, the US dollar is about to gain momentum soon, as it has already tested the local resistance at 97.35. The Canadian dollar is extending strength, finding support from growing oil prices. The rally of oil prices was triggered in response to the events in Syria. The US dollar versus the Canadian dollar pair is trading at near 1.3085. Remarkably, the loonie has been unaffected by a minority government formed as a result of the general election and weak retail sales. Market participants seem to neglect information noise. They are betting on the strength of the Canadian dollar, which will be ensured by the Bank of Canada's policy meeting next week. On October the 30th, officials of the Canadian regulator could express the neutral stance on the gloomy prospects of the global economy and put the target overnight rate on hold. At present, the market expects the key interest rate to be trimmed by 15 basis points within the nearest 12 months. That's all for now. Thank you for watching and see you back tomorrow.